out. So let's talk about building credit. So a couple of different things that I want to try to go through here is kind of two different options. Number one, if you don't have credit, what's the best way to start and get it? And then kind of on the back end, we'll talk about how to raise it. Maybe
Sure.
you've done something and it's gotten a little bit lower and you want to try to get it back up. So,
Right.
so if, just for example, you're 18, 19 and you don't have any credit, what's a good way to start building it? What's the best way?
Right. So I always recommend, if you're not 18, 19, if you are a little bit younger and your parents can agree to maybe co-sign on you with, like a piece of furniture or something small like that, then you can make payments. And having your parents as a co-signer will allow you to have that line of credit. But a more realistic scenario, like you said, being 18, okay, I'm on my own. Cards like the Discover It card are going to approve you. They have student cards.
Okay.
Unless there's just some sort of crazy external circumstance, which is not likely. So you can definitely get approved for the Discover It cards. And a good rule of thumb is not keeping an open balance any more than 30% of what your credit limit is. So for instance, if they give you a credit card, your limit's $1,000. Go out, because they do have a introductory 0% APR, typically 12 months. Go out and buy something for $300, and then over the course of 6 months, just pay a little bit back. That way, those amounts are hitting your credit report. It's showing that you have an outstanding balance, and you're paying it back. You're not getting that interest as if you would, if you waited
Right.
12 months to buy it. But you can definitely build your credit through that. And typically, like you had mentioned, if your credit has been hurt, it will take about 6 months to get it back to where it was if you were adamant about doing things to help it. But it can take as much as 5 minutes to decrease it.
Gotcha. So I know the first knock is don't get a credit card, right? Like there are a lot of people that are very against credit cards,
Sure.
right? So what do you tell those people that say, hey, listen, you should stay away those at all costs?
Yeah, so definitely self-reflect a little bit. If you were the type of person, we all know those types of people that are like, if I've got $1, I'm going to spend $2. Maybe stay away from them. Maybe go the route of, like I had mentioned, have a parent or a close friend co-sign for a small piece of furniture if you're wanting to rearrange your bedroom.
Is there a minimum age that you have to be in order to co-sign?
So I believe it's 18.
Is it? Okay.
I think you have to be 18 to sign on for somebody else. I know that when I was 14, I got my mom to co-sign with me on a piece of furniture. And then when I was 18 and able to have a credit card, my credit score was already decent because she helped me out with that. But yeah, as far as credit goes, I think we spoke earlier about, the Dave Ramsey thought process.
Yeah.
You don't need credit, you do.
Yeah, yeah. Let's just be honest.
That's just
my point is too is if your first credit card, your limit's going to be hundreds of dollars, right? It's not like you're going to be able to go out there and like sink yourself forever. So me personally, I don't see how anybody can go through life, especially starting out, without building credit. Like you have to have credit to buy a car, to buy a house. Like you have to build it.
On a college campus, you could go booth to booth to booth and sign up for these credit cards, and they're just going to instantly approve you. But anymore, there's been credit laws that have been established through Congress that don't allow them to advertise like that anymore. And realistically, apps like Credit Karma can break down what is good for your credit, certain ranges to stay in, and too many hard inquiries, which is what you get when you apply for credit, is going to damage your score. So you really don't want to have too many, especially back to back.
So we've got the credit card option. We've got getting somebody to co-sign for you. Is there any other ways that you can think of to start building some credit? I think I've heard of maybe if you get a utility, you can sign up for a utility or.
Yeah, so utilities can help, but typically utilities want to see that
you have.
Yeah, they want to see your credit score.
Right.
Because they give you have to give them your social security number. They run a soft credit check to ensure, because when we bought our house, it's going to, based on how your credit is sitting, is whether they're going to make you pay an initial deposit or not.
Gotcha.
And so it can help a little bit, but they want to see that you have credit before.
What about a cell phone? If you go sign up for a cell phone, will that build you a little bit of credit?
So they will do a soft credit pull on, just to make sure. Again, they're wanting to see that you have credit established.
Right.
And it all kind of revolves back.
Yeah, that's the chicken or the egg, right?
Yeah,
that's the issue.
But that as well can help. Now, it's not going to be as big of a difference as if you have a credit card. If you go and take out a line of credit, and the credit bureaus rank that because that's so much more of a risk. There's not really any collateral there. If you get a phone, you quit paying for it, they can come take that phone.
Right.
And that's going to hurt you a lot.
Right.
But as far as building, it's not going to build you that much, especially also with a car payment. It'll build you a little bit, but major collateral items are what build you up. And then if there's no collateral, like just a credit card, that's the highest risk for the credit companies. So that will affect your score.
I gotcha. Okay. So a good credit score is what? In the 700s? Is there a tier? It's kind of tiers of.
So, yeah. And they've recently increased how high a credit score can go.
Oh, wow.
So it's a lot of moving the goalpost with that stuff. Generally speaking, above 700 is really good. As far as for mortgages, if you get dropped into tiers, so whether you're a 740 or an 800, doesn't matter.
Same thing.
They're going to just put you in this class. Now, for other smaller things and just for your own peace of mind, you might want to stay closer to like the 750 range if you can.
Right.
A lot of people, you start right out of the gate and you get approved for, like I had mentioned, the Discover It card, and then you check your credit and you're seeing like a 600. Like, what happened? Well, you don't have any credit. It's your first thing.
Right.
The only thing the credit bureaus know is that you started off with no credit. Now you've got a hard inquiry on your account. So you got to basically prove to them that you.
And the reason a good credit score is important, obviously, just to get approved, but when you go for loans, the interest rates fluctuate according to credit. So the better your credit, the smaller your payment's going to be, right? Because you're considered less risk.
Yeah,
which it's all a risk. It's all a risk game to the financial companies. Yeah, that's good. So if your credit's low, or if you don't have any credit, how long before you get the Discover It card or something like that before you can see that start to climb?
So yeah, like I said, it's going to take about 6 months to repair something.
Okay.
For instance, if you've got a collection on your credit report, you can call these different credit agencies, credit bureaus. And just basically ask them, hey, what can I do to get this up? And they'll be more than happy to help you. But just kind of, if you've gotten yourself in a situation where it's like, okay, I've been maxing out my cards, I'm having trouble paying it back, that's time for a mindset change. And that's where people like Dave Ramsey are beneficial. If you can get in that mindset, now he goes to the extreme.
Right.
It's not realistic. But yeah, if you're in a position where, okay, I'm spending way too much money, that's a mindset change. But if you have certain marks on your account, there are very specific things that you can do to get those off your account, to repair them. And again, that's a case-by-case basis.
Right.
That's hey, I've got this very specific issue. What can I do for this? And then somebody can answer that question. A broad, just kind of cover all the bases. It's hard. It's hard to give that answer. Obviously, the easiest answer is to, hey, stay on top of it from the beginning. But, it's not a perfect world.
So getting your credit, like I've always heard that anytime somebody checks your credit from a credit agency, it will lower your score a little bit.
Right.
Are there ways to check it? What's the best way to kind of keep up with it?
Sure. So the difference between that is a soft pull and a hard pull. A soft pull is just, they're going to basically look in. It's window shopping for these agencies. A lot of car loan places will do a soft pull before they do the actual hard pull to see if you can get approved.
I see.
If you're going to get a phone, if you're going to do payment plans for a phone instead of buying it outright, that's a soft pull. Now, once you actually get a car loan or you're getting a mortgage, they're
going to check it.
That's a hard pull. And those hard pulls will hurt worse depending on how much money. If you're taking out $10,000 to buy a car, or if you're taking out $200,000 to buy a house, that hard pull is going to hurt you a lot more because it's for a lot more money. Gotcha. Even if you don't end up getting the loan, doesn't matter.
It still dings you. Do you know how many points that takes?
No, it all depends on the person. So if you started off with like an 850 credit score and you're going for a less than average mortgage, it might not hurt you very much.
Okay.
But if you've got like a 600 credit score and you're going for a more than average mortgage, it's going to hurt you a lot.
Gotcha.
So they take a lot of things into consideration. And again, like I said earlier, there's a lot of moving the goalposts.
On that stuff.
It's just best to play it safe when it comes to credit.
And it's going to take a little bit of time.
It'll take a little bit of time.
So you hear Credit Karma, you hear all these other places. Are those good places to kind of I haven't done that, but like you set up an account and you can check it as often as you want.
Yeah. So Credit Karma is good, and I'll just say good because the score a lot of times is inflated, and that goes again with if you're going to take out a mortgage or if you're going to look to rent an apartment. If it's your first place, the credit score that they pull is going to be different. You've got 3 different main credit bureaus, and a lot of times they'll take an average of the 3 because they'll all be a little bit different. Sometimes they'll just take the lowest because that's the most accurate depiction for them of what your credit score is. This is the lowest it could be. These other high ones, okay, maybe, but this is more realistic. And going back to a mortgage versus a car example, if you see on Credit Karma, okay, my score is a 750, that's probably a little bit off. But then if you go check for a mortgage, if they do a hard pull, it might only show a 700. But then the same day for a car loan, it might show a 730. It moves it a little bit depending on what you're doing. So it can get a little bit tricky when it comes into that. But Credit Karma is very good.
Do they show you, like, if something has dinged your credit, will Credit Karma show you what that is?
Yeah, it'll show you exactly what it is. It'll show you the company that took out the hard inquiry on you.
Okay. So that's good. That gives you a place to start. If your credit's not good, that gives you a place to start in order to try to get it back up.
Yeah, and places, the different credit bureaus, you can get a free report from them every so often that won't hurt your credit. Directly from the source. So that will be a very accurate reading of what your credit really is because it's coming from them. But too often of a request for your credit score will hurt you, which has never made much sense to me. I'm trying to figure out what I'm doing. Why are you going to ding my account for this? But so Credit Karma is a good place to start to get a ballpark idea of where it is. And if you want something specific, go to the source and get your one free one per, I think it's like a quarter or something like that. For 3 months. And then move from there.
Anything else on building credit?
I think that's a good base.
That's a good place to start?
Yeah.
Okay. So basically, guys, what we're trying to do is to kind of help you get started with it. I mean, the bottom line is you're going to have credit, right, in life in order to purchase stuff, like to get houses and to get cars. Like, it's important to get started when you're younger. So what we hope we've done is kind of given you a little bit of an idea how you can get that started. We do have other videos that you can check out that's got to do more with maybe investment or budgeting. Maybe those can kind of come into play as well. But also on the same page, there's an inquiry you guys can fill out. And if you want to sit down with either one of us, or if you have questions, down at the bottom, there's a way that you can send information, and we'll get in touch with you and we'll help you with anything that you need. So, Zach, I appreciate it.
Absolutely.
All right. Thank you. Thanks.